inching up a 0.25%, sitting at 26,802 points. Now, most market commentators are waiting for this correction to come, but the market just appears to want to go higher. What do you think is going on?
Yeah, look, we've come in pretty strongly, largely led by international markets. The strong open this morning directly correlated to the overnight rally that we've seen in the US last night on the Dow. So we've come in higher this morning and sold off. I mean, for the week, the ALSI future, which is the index that we track, is roughly 3.5% up for the week. I must say, I fall into the same category as most investors waiting for this pullback. But I think the problem is that everyone's waiting for this pullback, which is probably why we're not seeing it. It feels toppish. It feels more toppish up here than it did certainly 6 weeks ago. However, this market just continues to extend. But look, looking at some of the commodities, something like gold that has had just a fantastic run. $1,050 to $1,070 is certainly where there's strong resistance, and we just can't seem to break through on the upside.
Gold sitting now at around $1,060 an ounce, or just below that, and as you say, just battling to.
But again, the price action suggests a lot of nervousness in the market. We sort of do a lot of work to get higher by $8 or $10 and literally sell off very aggressively if something happens. Earlier today, gold got to 1,068 on the DEC future. By the time I left the office, it was 1,062. So very quick $6 sell-off there. And similar kind of price action in the equity markets as well. During the week, you saw Wells Fargo being downgraded. And this comes after they reduced sort of double their annual earnings from last year, returning something like $3.2 billion for the third quarter. The Dow fell 200 points on the back of that. So, people are really using... Yeah, absolutely. Really, really nervous. Certainly using this for this opportunity to take profits, at least. Certainly for those that are long. For those that have sat out, well, all we can say is that you just got to continue waiting. This is the kind of market that really tests your patience.
Yeah. Now let's look at individual stocks. Construction sector, we had Aveng indicating that their order book standing slightly higher at 31.3 billion rand. Some parts of the business stabilizing, but conditions are still tough in the construction sector. What was price action on the back of this trading update?
Not too serious. I mean, I think largely anticipated. The strong rand, as you've mentioned already, is certainly weighing down on these construction companies. You're seeing it in its larger peer as well. Murray and Roberts, certainly an announcement out from them that the strong rand really affecting them. The order book is one thing. That's fine to keep intact. But what's really affecting them is the offshore orders being cancelled. And that's not being replaced easily and steadily enough with either local orders or new fresh offshore orders.
Yeah, what's keeping the local construction sector buoyant is the government infrastructure program. Private sector is not building at the moment.
Absolutely, the private sector is dormant at the moment. Everybody's waiting. You would think that the lower interest rates would sort of lure investors back into the segment, but I think the market's nervous, people are nervous. Let's not forget that interest rates, certainly mid of next year, could start going higher again, and people taking that into account. And also the consideration of the excessively high debt levels that people have to finance.
Now, looking at the prices of these two stocks, Murray and Roberts trading at 57 Rand 25 cents down today. Aveng also down at 41.55. Do you look at these two stocks? What are your expectations on where these prices are going to go?
Aveng is trading within a nice tight trading range that sort of extends back to the first quarter of this year. It's trading at the low end of that range. So we would look to pick up some Aveng. We certainly we're buying Aveng on the sell-offs. With a relatively tight stop as a break out of that. Murray and Roberts we don't have much feel for at the moment.
Now the banks all had a tough day today, all ending in negative territory. Standard Bank leading the way, ending at 99 Rand 85 cents. There was a trading there was a downgrade to the stock from UBS. Was that the reason that the stock ended low?
Partly, you have to believe so. I mean, UBS coming out and rating or downgrading Standard Bank to a hold from or to a neutral from a buy. So certainly losing some of that flavour internationally. But more than that, you know, if the market's long Standard Bank, it's probably not a bad time to start taking profits at these levels. APSA as well. You know, we've been watching APSA closely. If you have been long from sort of 110 to 115 rand, 130 rand is not a bad level to start taking some money off the table. And you're probably seeing a lot of that. Overall, the banking sector ended the week flat. Standard Bank particularly did well in the first half of the week. You got the analyst downgrade out on Wednesday, late Wednesday. Thursday and Friday you saw some profit taking and that pulling that back as well.
Now I spoke to Annabelle Bishop from Investec, and she was indicating that the Consumer Financial Vulnerability Index has decreased recently, and this shows that consumers are still under pressure. Now, given the fact that, as you mentioned, debt levels are still serious high, consumers are under pressure, do you look at buying into banks, or is it just really trading opportunities?
No, you know, we prefer the short-term trading opportunity. You get 3 or 4% out of it. It's fine, take the money off the table. I do believe, you know, as I sort of stated earlier, I do fall into the similar basket of most investors waiting for the pullback. And, you know, just to put things into perspective, the PE of the S&P at the moment is roughly about 20. That's double where it was at the March lows. So stocks are expensive. And you know, I buy into that opinion that stocks at current levels are expensive. You're getting the intraday volatility to trade this actively, and I believe one should make use of those sort of intraday moves.